All right, good morning, ladies and gentlemen. This is Clueless Trading Frank. It's a very snowy Saturday morning, approximately 10:30 a.m. Eastern Standard Time. This is a introductory but important webinar primarily for new members, but doesn't help to refresh some basics. That's really what we have to get back to for members who have been with us for a while, such as Liz. We have Lady Luck. We have Paul, who's signing in right now. I think he's trying. We have Rip, and we have a great new member, Steve. So, full disclosure, this is purely for financial education and not for any solicitation or advice. And within the next 60 minutes or so, we are going to cover a bunch of important things that will help specifically new members to maximize what they can get out of the Clueless Trading service, because that is, after all, the most important thing. So first and foremost, the Clueless Trading service, a quick refresher, was designed originally for traders with medium to advanced skills when it comes to technical analysis. But as the service developed since April 15th of 2014, it's pretty young when you look at the peers out there on different trading services, subscription services. We're very young, but we have definitely made a big footprint when it comes to performance and what we're doing with the markets. So the Clueless Trading service was primarily designed for people who kind of knew a little bit about technical service. As time went on, a lot of newer people came in, and I decided that I would take the time, specifically on weekends, to go ahead and work with them on teaching them the basics of what technical trading is. And there's a big disclosure. I am not a atypical old-fashioned technical analyst. The basic patterns never change, but what I do, as you guys have certainly felt the taste of it, is structure charts in a way which in many cases are very, very different in the way they're structured, i.e. all the lines and all the different things that I place on my on a basic chart than what you're used to from following other people. It's not necessarily good or bad. All I know, it works for me, and it's kept me very happy over the past many years as I've developed and continue to develop better ways of forecasting the markets and individual stocks, and that is a fact. So what I'm going to attempt to do today is to go ahead and explain how you guys, when I'm putting out a chart out there, how you guys, ladies and gentlemen, can read into it, because after all, the final decision whether to buy or sell is yours, not mine. So the amount of information that I'm putting out there, as in the message that's coming out of the charts, is something that you guys have to not necessarily master, but understand, so you can make a decision whether to take profits, whether to cut losses, and all that kind of stuff. Now, this being the introductory session, there is no way in the world that I can get into the actual heavy-duty lifting of the interaction of all the different indicators and stuff like that. So I'm going to try to do as much as possible. But in order to really understand and make the most out of it, certainly at some point sooner than later, sign up for the group ACS, that's Advanced Coaching Sessions, and the packages that were put together a year and a half ago, almost 2 years ago, are damn cheap. I never raised the rates and stuff, because to me, it makes my life a lot easier when you guys can figure out to a certain degree what's going on, and that's really my goal. So I don't have to constantly keep on explaining what this line means and that means and all that kind of stuff. More you practice it, the better off you'll get. Believe me when I tell you, I am not some sort of market genius, okay? I know a lot about economics. I always said that, and I'll certainly go head to head with anyone when it comes to, you know, macro global finance and domestic politics and finance and stuff like that. And I've been on Wall Street, and I was on Wall Street for 14 plus years, so I understand a lot of the dynamics of what happens on the money management side, which the average trader out there, even a lot of the pro traders that you guys follow, have absolutely no clue about. So they keep on talking about the same crap. Okay, the market's overvalued, blah, blah, blah. But they don't quite understand that the people who are really holding the chips, the 800-pound gorilla, the mutual funds, the hedge funds, the institutional pension funds, how they manage money. I've been in that sector, and so that's the reason why I shed more light and tend to be more right than wrong as in forecasting where markets can do or what, you know, where they can go. So saying all that, let's dive in for newer members. Let me just point out a couple of quick things here. 1 second. I'm going to drag a screen. I'm going to quickly run through the website and some of the videos and stuff that you guys can utilize some what's in there. Our website, I've been trying to work with this developer, and believe me, these guys are just, they just don't get it. And so I'm in the process of working with another developer to revamp the website so it's you know, it's just more that is better. It's really as simple as that, and that work is in progress. I'm trying to, where did it go? Hold on. We're trying to get the site in here. All right, this is annoying. Hold on. Too many screens here. Bear with me. Have patience. Paul, do you have a mic by any chance? Not that you need one right today, but do you have one? Or just type in if you have a quick question or two.
Yes.
Oh, okay, good. Thank you. Yeah, great. Okay, I'm trying to get this out. Okay, I'm just going to pull it up here. Sorry about that. That's one of my animals stepping on my keyboard. We have 5 of them in the house, so either the small dog or the cat sits on my keyboard half the time. So that's what it was. Okay, so when it comes to the site, this is the basic format. The content of the site is put under members content. Real simple. You can go to members area and click it. And once you click it, you get, when I put, I'm more of a visual person, so basically I don't like writing long-winded reports. Like my wife says, I can write business correspondence like a pro after all those years of, you know, working in the business world. But when it comes to writing a long-winded story about why one should buy a stock and why the market's thing, I would rather do it in the form of a visual video cast like I do than write a you know, 5-page blog. So because of that, the end of the reports have become less are more sporadic, but you can certainly find them on the right-hand side of the thing when I put it out there. I put one up on January 2nd. You can click on it. You can go in there and attach within the end of the day reports or end of the week reports. You will find the video cast, okay, in between the few lines that I write on there. These are important for newer 1 second, please. Sorry. So these are important because for newer members, you need to listen to these. Please do at your own time, and they'll give you a idea similar to what we're going to talk about today into how to read my charts. They were put out there about a year ago, so obviously there's some more advanced stuff going on, and that is not covered in these, and I'll be updating these 2 videos soon. This particular box here, this particular matrix here, I'm going to be filling these up more regularly so people can see a lot of the trades that we're doing and what kind of performance we're getting. One of the biggest deficiencies of my service, I'll be honest with you, is that I don't, I haven't had a chance, primarily because of manpower, in to put out some significant amount of trades that we do, which the performance ROI, return on investment, are staggering. If I plastered here like many other services do, that we did 1,000%, 800%, 600%, 200%, 1,400%, and all the stuff that we do within a matter of days, if not within a matter of hours, then I would look like most other services out there, with big fat banners saying, join, I'm going to make you a millionaire. Well, that's not my goal. Your goal is to make yourself a multimillionaire and make, hundreds of thousands of dollars in a short period of time. So my goal is to basically provide the tools for you to do that. But this will be updated more, so you can review quickly in a lot of the trades that we do. So here, just a matrix, end of the day charts. This chart section is going to be fully updated, I would say, within the next 4 weeks. So all the charts that I post out there, which you can easily at this point just click media under your under my Twitter feed, the private Twitter feed, and you can scroll down every single chart that's been put out there. So just keep that in mind. You want to look at a quick chart from like 5 days ago, Amazon at 749, 750, 755, and what I drew or what I forecasted and alerted, it's all there. So that's on the Twitter feed. As you know, Twitter puts out the column which says media. You can click on that and review that at your own given time. This particular section will be the same, and you'll be and this will be populated. The mobile chat is the mobile chat that automatically shows up here as a API, as a chat room box, and you can click on that. The long-term portfolio stuff, I did that a while ago, and I still have to really figure out the dynamics, how that long-term portfolio part is going to work, because once I put it out there, it has to be updated at least every month, if not every couple of weeks. So that is going to be something that is going to be extremely useful to people. All this stuff is there. This video right here, if you click it, the introductory site navigation, that's also very helpful, especially for newer members, because this will tell you how to walk through and how to send the follow request and all that stuff to my in my service. So it's a navigation video that I had done, instructional video. So that's basically it. This one is basically the glossary of frequently used terms. You can click on it. Every trader uses their own lingo, and obviously they're the shortened version acronyms such as BGT, like behavioral game theory, all kinds of stuff, so that's just a glossary of the most used terms. These are just basic things here that you can utilize, but if you're an active trader, you obviously don't want to be relying on my website to chart your to look for your quotes and all that stuff. So that's basically it. The economic calendar is helpful. You can click that and basically look at it, and you can see what's coming up for the next week or so, and that's helpful. My stock twits, when I'm posting on stock twits, those updates directly show up here. So this is an interesting feature, because if you're not tracking me on stock twits, and I think there's like about 27,000 plus members, right, followers right now. I'd like to have 27,000 members, in which case you guys would never hear from me. The bottom line is that it grows every single day, and the updates and stuff, nothing new here. The first responsibility that I have is you guys as my paid members. So the stock twits, the free charts and stuff that I put out there are automatically, show up here, comments and things like that. So the Cludosate trading reports, this shows up that the last one was done on the 2nd, and that's basically it. Okay. Going up there on the menu section, up on the menu bar, you have testimonials from regular members. I would say a good chunk of them are still with us. Attrition, some of them have gone. Many of them keep coming back, and the testimonials are basically a very quick way of looking at what they're saying. I don't tell them what to write. Obviously, if it's something nice, that's nice, and they can write whatever they want. I'm not going to censor it. So, so testimonials are key. if you want to learn a little bit what their experiences have been, and I think it's worth looking at it. It's a great it's a great tab to show to your friends and colleagues who might be interested in looking at us to see what other people what their experiences have been with Clueless Aid Trading. So it's key. Account is account. You click there. Your account is there. You can change your username, all kinds of stuff, and that's it. So that's our website. Any questions? No?
No, boss.
Okay, that sounds good. And bio, yeah, you can read a little bit about me. I'm a very private person. Some of you know me. And I have a fantastic family. God has blessed us with a lot of fortunate things. I work very hard, obviously, and it's not just a service. When you love something, you just do it. But it tells you a little bit about how the service came about and what my past background is in the financial industry. End of story. All right, now let's go. So that's kind of a quick overview of the thing. Very important thing. My mission statement for doing Clueless Aid Trading Service is simple. I want all of you to really prosper. Okay, period. A lot of the times I act as a coach. It comes naturally. I want to motivate people. Do not ever take me the wrong way. I'm basically a nice guy, but after all, I'm a New York guy, right? So the bottom line is, we can get tough. Sometimes the banter in the chat room gets back and forth. That's normal trading stuff. There is no harm meant, and we're not in the business of denigrating anyone or putting them down. Period. Sometimes I can't answer a question, and sometimes I'll say, hey, use your own intellect to go back and read what I wrote instead of asking me the same question over again. There will be times I have no answer to the questions, and I say I don't know. So just please keep that in mind. And I believe in civility. I don't believe in people putting out how many dollars they're making. If they want to talk privately on the private message, feel free to do so. A lot of people share what they're doing. I share a little bit with them, like some of the monies that have been made on a particular trade. But we're not in the I encourage people to put percentages down. Great. I do not encourage people to put how much, whether they made 20,000 that day, whether they made 2,000 that day, or whether they made 200. I'll tell you one thing. There are people in the group who are consistently a couple of times during the week making nice fat 5 figures, and some of them are actually making more than me in particular cases, in particular, what do you call it, series of trades, because they're more hell-bent on it, and they really believe in what I'm putting out there, and they're jamming, they're putting pedal to the metal. It's a big numbers. Some people have told me on certain trades the numbers that they made. I'm like, wow, God bless them all. You know what? That's just the way it is. So saying all that, I'm always open to answering questions. And as you know, my engagement on my service, that's a key feature of my service. The constant engagement with my members, free trial subscribers, is a key component. We are, last thing I'll tell you before we get into this is that once you are within a month or two, once you get the overall feel of what we're doing, it's not just about trade alerts and charts and stuff like that. It's about a full-scale, broader understanding of the U.S. financial markets and the global financial markets. Nobody, and that's one thing I can stand by, nobody out there teaches you about the markets like I do. A very complex topic, try to make it quite simple and lay it down so that people can understand what the interactions are with, let's say, the U.S. dollar, the government bond, the U.S. 10-year government bond, or what the dynamics are with all kinds of different macro factors which affect our markets. That's a key feature of my service, and I think that's big. So it doesn't matter if somebody's a quick $2 trader, wants to scalp, 40% here, 30% there, or make 100% on an option call, or make $2 on a stock. The point is that you will be far more educated by the time all is said and done. And it takes about a month or 2 or 3, and if you have a little passion for learning, God bless you. You're going to be a much better trader and investor than you ever imagined. Sounds good. Let's move on. So, so when it comes to pattern, I don't want to get into the detailed stuff. Like I said, do sign up for the advanced coaching sessions for that stuff. But let's look at a couple of patterns that are constantly replicated in the market. One is your head and shoulders. You have a head, and you have a head, a peak. You have a left shoulder that it came from, bounced off the green line, which is the neckline, bounces off, makes another run up, fails at the left shoulder. This happens constantly, by the way. Can somebody tell me where this happens more often than not? Like what particular asset class? Take a guess.
S&Ps.
Exactly. Perfect answer. S&Ps. S&P, Russell 2000, on the Dow Jones happens consistently. All right. Very good answer. So bottom line is, here's your neckline, falls below the neckline, and then a different set of patterns come into play somewhat down here. These are range tradings. We've seen this happen repeatedly. We saw it happen recently in Amazon, right? Stocks trading in a range, a 50-point range, and then it breaks out. Which reminds me, I want everybody, and I'm sure many of you have done, listen to the last video cast that I did before the Amazon and the market breakout, well, the final market breakout, and what I said about what would happen. There was a terrific question from our loyal member, Corey Golfman, about when the uptrend in Amazon would begin. My answer was, I have no idea, but I expect that this requirement needs to be met before the stock changes its trend. And I explained it very clearly, and not only did that happen, it surpassed it. So those things are prescient, because somebody who can, and again, I simply went by my pure technical analysis from Clueless A trading style to explain that if that happened, if that candle developed, then you're going to start to see. And not only did it develop, it encompassed it within 48 hours. So that's like I said, we're not in the business of making 10, 20% here. This isn't, we're talking, if you're playing options, you should never be satisfied with 20%, because you're taking way too much risk in the market with the options, whether it's small amount of money or larger amounts of money. Okay? You're taking way too much risk and mental fatigue, for a better choice of words, right? To make 20%. You need to make 60%, 80%, 100%. That's my goal. Again, if you have a larger amount of money and you make 40%, that translates into a larger amount of dollars. So, but again, options trading is aggressive, carries risk, and that's why this technical stuff comes into play in a big way. In a big way. It's not like sitting on a stock. Yeah. I'm sorry.
Where's the video you're talking about? You want us to look at on Amazon?
Okay.
You did a video on Amazon already?
Yes. Thanks for reminding that. One of the key features of my service is basically the Clueless A trading channel, as I had mentioned to you very clearly. All my videos, all my live video casts are on the Clueless A trading channel, the YouTube channel. So basically, you can scroll back from now to 2 years ago, and all the videos are here. The last video I'm talking about, the one that Amazon won, was this one, the free strategic market update. Okay. That was thing. So so that's a very good question that you asked, not just about the video. Every single new member needs to basically go in there and subscribe free, of course, to Google on the Clueless A trading channel and put your email in there. Anytime I'm putting anything up on a video cast or live, it will appear right here in this forum, which is basically the on YouTube, Clueless A trading. So that's, very, very key. Like I said before, I don't like writing long-winded blogs, and so most of my stuff, 90% of my stuff is going to be visual and in video cast. So you got to be notified. I always notify people, obviously, through their Twitter feed. I post that in the chat room, but more importantly, you get notified immediately the minute I'm putting something up there. And encourage, people, your referrals and stuff to listen to this stuff. It's free. The free stuff is there. There's advanced coaching sessions and stuff that are private for the people who paid for it. So those are also uploaded there. But then I open up some of them at time to time for people to see. All right. So moving back to the technical part here. Ranges range breakdowns or breakouts. These are extremely important, extremely. More often than not, I have made more money off the rectangles or trading ranges and channels. Consolidation channel, stock moves up, profit takers come in. If you're buying a stock here and you were basically following all the different type of overbought, oversold conditions, in case in point, Friday. Everyone's freaking out. It's over. I kept on repeating on Thursday and Friday that we were extreme oversold to the point where we would definitely, one or the other, get a bounce within the next 24 to 72 hours. And not only did we get that, it was a face ripper. And so internals are extremely important. Before I go into technicals, I explain one thing very, very clearly, and this is important. When you look at charts, everyone looks at charts. Everyone has their way of looking at charts. But charts are skewed by cognitive bias. In other words, and this is true, in other words, how they look at the market. Are they bearish? Are they bullish? Are they scared? Are they very happy? Whatever the case may be. Charts alone then tell you the whole story, in the sense that when the biggest money is made on predictive analysis. And I've repeatedly shown that. If you can be a day or so early, in the case of options trading, maybe an hour early. In the case of S&P trading, maybe 15 minutes early, you're going to make the most amount of money than somebody who is basically coming in at the latter end and trying to chase it. Chasing is not, there's nothing wrong with it. Lemmings and chasers, right? But the predictive part of it is where the real money is made. And the predictive part of it is the hardest, because for people who are not that focused on technical analysis, the predictive part doesn't make any sense to them, because they want to see some confirmation in their head that it is going to go higher or lower depending on the trade bias they have, long or short. But by the time that's done, these machines that dominate the market take those profits away from you. So that's why better to have that little pain, like I said, pain of sacrifice, and then wait for that pattern to develop, and then you go with it. So the external part of it is the charts, and and anybody can pull up a chart. How they predict the charts is where the skill comes in. The internal part of it is based all the indicators come in, whether it be the most basic of all, but a very reliable one, which are the STOs, the stochastics, which is the first derivative of the relative strength index, whether it be McLaren oscillators, extremely useful tool for extreme inflection points in the market, such as last week, where the McLaren oscillator at one point was minus 600. You get a dead cat bounce, oversold bounce, except this wasn't an oversold bounce. This was a face-ripping ascending triangle breakout that I showed repeatedly. Whichever the case, markets get overbought. So we'll see. So the point is, all the internals down here, whether it be the momentum index, the dynamic momentum index right here, whether it be stochastics, whether it be McLaren oscillators, whether it be MACDs, all those are the internals. The internals are what the predictive part comes in. It is not something, I can assure you, I can guarantee you this part, that you can master in 1 or 2 or 3 months. Practice, keep on looking at the stuff. Some people catch on to it faster, because it's not as simple, like it's oversold and for sure it's going to get overbought. Nope. There's a lot of different nuances to it, and different indicators correlate differently with, interact differently with the charts that you're looking at. So again, just keep on practicing a little bit more, and you'll start to see what happens. Okay, channels, consolidation channel, breakout, happened repeatedly over the past few months. The flags, the bull flag, the famous bull flag. It's nothing but a consolidation channel, to be honest with you. On a higher level, a bull flag can be, it doesn't have to be like a channel. It can be a flag type of situation too. Or it can be, let me change the color on this. Okay. Or it can be something like this. Okay. And then breaks out. So different types of bull flag, but basically it's a flag. You got a pole, and then you got all the action happening on the upper end of it. And the consolidation channel, I want to remind everyone, is not necessarily, and it's nothing. Again, this is not like I keep on repeating. It sounds kind of like a preacher, but it's true. It's not a game of certainties. It's exactly going to happen. But consolidation channel doesn't mean that it's going to break out. How do we know it's consolidating? It can break down. It's happened a bunch of times in the market, quite a few times. Otherwise, we would just constantly keep on, just keep on shoving money in the market every 2 minutes, every time the markets pull back, and then take everything out on Friday afternoon, right? It doesn't work like that, So consolidation channels can break down too. Pennants. Basically, pennants are key because and remember, chart patterns are nothing but a manifestation of human behavior, of trader behavior, investor behavior. These are not just happening out of the blue. This is because humans, with the aid of machines, the institutions, are taking advantage of the overall humans that are trading the market. So when you look at something like this, like a pennant, you are basically starting to see the trading range get tighter and tighter and tighter. And again, a pennant can break down too. But once you get to that point where something big's going to happen, there are fewer and fewer players, active traders, getting into at these levels. And that's the point of max uncertainty, and that's why the internal readings are extremely critical, because this pennant can also break down. Symmetrical triangles. I showed the symmetrical triangle clearly, repeatedly on a bunch of stocks recently. Those symmetrical triangles broke out. They didn't break down. They can break down too. Ascending triangles, the big daddy that took place multiple times, but most recently in the past 48 hours. Okay? What's the funny part is there are very, very smart people, and I mean that, on StockTwits and other forums that I track, technical guys. I didn't see one single guy, I mean, this amazes me, who showed the ascending triangle that I've been showing since the market started to consolidate since last week. It just boggles my mind. It proves the point that I want all of you to understand, which will make you a lot more money than you can ever imagine, is you have to fight your cognitive bias, your biases. It doesn't mean you have to be a crazy bull. In fact, I'm incrementally turning bearish. And I'll talk about that in the Sunday night ACS session and the report I'll throw out. And in fact, one of the guys who have been right on the market since all the way to 2009, Tom Lee. He used to be with JP Morgan. Then he's got his own. He made so much money. He's just a brilliant guy. You know who Tom Lee is? Look him up. So, the funny thing is, I jokingly told one of my I think it was in the chat room, and then I had texted one of our other members that I'm really getting tired of this bull market. And he started laughing. And guess what shows up on, go to CNBC.com. Tom Lee is incrementally turned bearish. And he thinks the year is going to end lower than where we are right now. And you know what? I believe that. I think I believe that. Because I think the market overall has come way too fast, way too quick. And there's going to be some big hurdles along the way. They're never going to make it easy for you on the short side. I'll tell you that. But we are in that final phase, which I mentioned in one of my videocasts, of a euphoric stage. And the final phase generally lasts, from my experience in managing money, institutional and retail, since about 1999, 2000, lasts about 3 more months or so. I would say March is when we really collapse hard. Give me 1,000, 2,000 point dip. Get some tactical bounces, doesn't hold, falls further. That's another day's story. Anyway, bottom line is ascending triangle. This is exactly what happened. So it still boggles my mind why these people never look at it that way, because their little voices in their head keep on saying, this can't be happening, this can't be happening, I didn't make any money. Like, most of the pros didn't make money, believe it or not. And they're either shorting the market or they're sitting on the sideline. So bottom line is, the bottom line is that I use those in my behavioral model when I'm looking at charts and stuff too. Descending triangle, dangerous stuff, right? We have had a bunch of stocks which have a descending triangles, but then they turned around. So this can be so this is basically what a descending triangle looks like. That's an ascending triangle, descending triangle. Wedge continuation. This is very important. This is in fact very critical for active traders. A rising wedge will have a fall. Okay, and that's your consolidation channel. So rising wedges, the so-called smart money gets in on the lower end, and then it keeps on going. And then the chasers come in, and the chasers normally get in somewhere around here, because by that time it's looking good, they're feeling good. They come in there, moves up a little bit. They're not quick on taking profits, and then come the sellers, because they were buyers at lower ends. This has happened to us all the time, and we are normally early. And consolidation channels freak people out because they think it's end of the world, but they could very well be breaking out. It all on the backdrop of what the market is. If the market has serious momentum like it has right now, has had since November 9th, has had, believe it or not, since Brexit. The fact is that it will be more of a breakout than a breakdown. So the wedge confirmation is important. The continuation, a rising wedge, falling wedge, best money maker ever, bar none. The falling wedge has and I back test all my trades because I've made mistakes too. I've made mistakes in not holding things longer, and really, and I mean that. Did extremely well over the years, difficult times, good times, whatever. This year, forget about it. I should just stop the book for the year. So bottom line is that falling wedges, unbelievable. So what's happening in the falling wedge from a behavioral standpoint is traders are shorting, right? So you short, moves up a little bit, you short, and the final guys who feel that this is it, it's never going to come up, blah, 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 they start shorting here. In the meantime, if you the band is narrowing, and if you notice the volume part, the volume is the sell volume is starting to decrease. The big guys shorted out here, and then these type of reversal bounces that you see, what we call a reflex bounce, is basically the big boys. Let's say they shorted at 10, and the thing's at 4. And then it jumps up to 5. So the big boys basically at that point, they'll take their fat profits. They made 6 points here, right, on the short. And then as they short cover and maybe go long a little bit, they're making another 20% on the move here. Another 25% on the move here, right? But those are all fake outs because it's still a falling wedge. By the time the so-called retail shorts come in and that's it, this is a short thing, this thing's just never going to come up, blah, blah, blah. And they tend to do that with large, powerful stocks, which brings me to a very important point. I don't want to get into it too much. It's simple. Large, powerful stocks, which are basically the 800-pound gorillas dominating within the mutual fund complex, are never let to die. Just remember that. I've been on that side. I know. They will find one reason or another. And this is not a question of what's fair, what's not fair, what's overvalued, or what's undervalued, right? This is a question of fund managers liking a particular company. So from a pure fundamental standpoint, analytical standpoint, a trader or investor can be dead right. Absolutely. But there's a fundamental flaw to that. And the flaw is The market is not right. The market is all about emotions, whether it's emotions of the retail investor or whether it be the emotions of the big fund manager. So the fund manager is also a human being. He's the one making the decisions. So if he likes Tesla, for example, I was kidding around with Paul the other day. We have Jasco, who's a great member. Paul, you should check in with Jasco sometime. He's also a long-term short on Tesla and has done well on the short side too. Great guy from Boston. So bottom line is that they don't leave them to die unless the company is something that has not grown into anything, like a GoPro or something like that, which was a sensation, right? It was one of the hottest IPOs of 2014. So to make a long story short, coming back to the large falling wedges work fantastically well in stocks like Priceline and Amazon and Google, even Apple. So bottom line is, and all of a sudden they burst out because the late shorts come in here and they put in the squeeze like nobody's business. I mean, it is dangerous, and it just keeps on shooting higher. Double top, we know what double tops are. They don't always look so pretty. Sometimes the slanted double top, maybe they'll double top here, but double tops are double tops. You break the neckline, you got a nice tradable move here. By the time if you short the neckline, you make the last of the move because it could be a possible, and again, then it could morph into a double bottom or dragon bullish formation. And that is part of range trading too. So this one has been a huge money maker, right? Identifying these in a dynamic market environment like we are involved in and will be involved in more because they're all machine driven is really the key. And that's where I try to get better and specialize in, is identifying these patterns, specifically these type of double bottom patterns type of thing is what's critical. Triple top, we might be going through that in the market right now, for all I know, because I saw something, as I was having my nice glass of red wine after Friday, I said, boy, thank God the week's over. Great week. I'm always looking at things, and I looked at something on my iPhone, and I said, that looks like a bit of a triple top. Remember, a triple top is never a triple top till it breaks the neckline, right? So by that time, it might be too late. That's the problem with identifying patterns. In hindsight, everything is very easy to read. Everything is 20/20. But at the time that it's happening, that's where you really got to figure it out. Predictive stuff. Triple bottom, we know what that is. So these are the main, the sort of the basic patterns that are in play all the time in the markets. So we'll move on. And there's tons of others too. So I suggest to everyone that if they want to learn a little bit more, go to Google. There are fantastic videos out there on chart patterns and stuff like that. And feel free to do that. Now, I use 4 different platforms for my charts, right? I started using investing.com. Very easy on the eye. Very clear. You can see this on your phone. I don't draw the lines on the phone. I do that on my computers, my trading station. But you can actually trade all these things in a big way. Now, one of the key things about what was that going through my head? I just lost my thought. Is the 4 platforms that I use. So I use investing.com. I use Thinkorswim, which is basically like a rocket ship because there's so much in there. Thinkorswim's used by the real techno Greeks. I mean, the tech geeks, not techno Greeks. And I use it in many different formats. I have different studies that I've put in there. And Thinkorswim is excellent in they have webinars and everything so that people can learn how to use it and all kinds of stuff. And I took the lazy way because over the past couple of years, I used to just have a Thinkorswim account. I had $200 in it because I used to trade primarily through E-Trade and in the Pro platform. And then I used another platform. And I did that purely to take advantage of the charting stuff. I think Thinkorswim charting platform has taught me more how to read the markets than anything has ever had. I recommend to everyone, regardless of what platform they're using, to have a Thinkorswim account. Put $100 in there so you have full access to all their features. And it's highly, highly recommended. Different studies are different, and you can make this far more complicated, or you can make it simple. Like, for example, looking at the basic trading setups during the day. This is obviously a daily. It doesn't take a rocket scientist to figure out, as the candles are developing, once you draw the lines on it, once you structure it, you got to structure it in channels. You have to structure it whether it's a falling wedge, whether it's a diagonal, whether it's a pennant, all that stuff. But once the structure is in place, it's kind of leading you where you need to go. So if you're seeing this big, again, candle dynamics is a whole different world, candlestick analysis. I'm not even going to go into that right now. I'm not a master of candlestick analysis, but boy, do I know how to read candles, okay? Because there are guys out there use these Japanese candlesticks and the high-shi, whatever, Eon and all that stuff. They're out there. And I just try to keep it simple because I just feel that just pure practice, and I know how to read candles. So anyway, just once you structure it, you can basically trade off this. You know, you're starting to see the second candle develop very strong. You know the third candle is going to be higher after it maybe dips a little bit. Fourth candle move. Generally, this is a 1 hour chart. You're not going to see, unless there are unusual circumstances, a move of more than 5 or 6. That's strong enough. Here you had 4. You had minor profit taking at the end of the day, because the stock had moved up from 124 on Wednesday. That's PNAW, and then, you know, nothing changed. It's still within the channels. So I use Thinkorswim, investing.com. Then I use, this is Warden, okay, and Warden is freestockcharts.com. Now, investing.com and freestockcharts.com are free. So just go in there, put in your email, and start using them. Because the one thing I want to remind everyone, the biggest, most important and critical point when it comes to technical analysis and when it comes to charts, trading on charts, and of course keeping fundamentals behind, you know, as your the fundamentals next to you. You know, I'm not going to go into a stock if it's got the crappiest fundamentals and just because the charts are moving. You know, I make a determination on that. That's why I'm not trading penny stocks here for my members and stuff. I have a couple of penny stocks for myself, which have really done really well. Crazy stuff, right? People make billions of that crazy stuff, but that's not my goal. So bottom line is that you have to have a visual representation of what these charts are all about. In other words, you need to look at it on a screen where you can see the things, which is very, very, very critical. So freestockcharts.com, for example, is Warden. You can have their paid version. I think it's like $19 a month or whatever. I did. But it gives you a real-time thing. But I have all these real-time other stuff when I'm paying for, so why should I pay for real-time quotes and options and all that stuff for Warden? Whichever the case, it's free. So you just utilize it on your own. Here's a chart of your lovely S&P 500 since January of 2016. And to me, there's a lot of stuff going in there, but it kept me bullish, because nothing really broke other than big, fat, ugly consolidations and corrections. The overall moving averages, other stuff, they all kept on going higher. Something might break soon, by the way. So I use freestockcharts.com. The other one that I use, which I don't have it open on this particular computer, I use two different CPUs to run all my screens, is one of the most advanced trading platforms I've ever used, and I've been using it for more than 10 years now. And I'm finally getting the hang of it over the past 3 or 4 years. And boy, has it been fantastic. And that is the Quad. And bunch of you are have subscribed to it, members, and they're picking it up. And here's your Quad. Now the Quad ones basically is Quad is a company. They run as a platform from Bar Charts, which is a separate company from Chicago. But the way I structured these and the way I use them repeatedly, and many of you, almost all of you have benefited of the Quad chart. Some of you new members have recently, some of the older ones have, is that they are the same data is coming in. You can't print a different price for Amazon, whether it's coming onto Thinkorswim or investing.com or Free Stock Charts or on Quad, but somehow it's represented differently on a visual basis. That to me is key. I term the word algo HFT, algorithmic high frequency trading. It moves and feels like an algo chart, and I've seen algo charts. I used to work with this guy who was a total quantitative trader, and he used his algorithmic charts that used to give me a headache looking at it, and I'm not kidding you. This is a simpler version of it, a prettier version of what those algo charts are. Every single move, every single tiny move on these candles means money. A candle of this magnitude means 200%. You guys know that. Look at this. A minor move detecting, and this was a chart that I had drawn. The market was falling, if you remember. It was falling on Thursday, right? Yes, it was falling on Thursday. Big red candle. We played the short side a bit. I had drawn this line as going back, these two major inflection points. And guess what it did? It went exactly there, tested the downtrend line. I put it all out there for you to see, and bounced. And then, of course, without getting too much into detail, the slow stochastics bottomed. And the slow stows are the big lottery tickets. The slow stows bottom 8 out of 10 times. You're going to get a severe bounce. I haven't had the chance to replicate these slow stows on other platforms yet. And I don't need to because I have this. Any of you who are interested in exploring it, you can call them directly. They give a big, I paid, as I mentioned before, more than $400 for this platform, and I don't even use like 60% of it, aside from the charts, and my code screen is displayed on Quad, which is very easy to see. It's in a simple table format. And you've seen sometimes I put the performance numbers out there. They're in green, in like a green script. Bottom line is, I told them that, hey, a lot of my people are getting serious. I have a whole bunch of traders who have gone to become full-time traders over the past couple of years. So they offer, I believe, a discounted rate of $120 a month. Try it out. If it doesn't make a difference to you, to your profits, then cancel it. It doesn't put any money in my pocket. Okay? Just be very clear about that. Extremely, extremely powerful. That's the way I look at it. Just by this simple chart. There's a whole bunch of indicators below, under this study. But I tend to use these two primarily, and sometimes I tweak around and use some other ones. Now, why is this technical mumbo jumbo so important? Very simple, because it makes money. I don't care. I mean, if I could just call the shots on the market by some sort of crystal ball with a couple of AA batteries in my head, then why the heck could I even look at a chart? But I can't. Nobody can. So the bottom line is, these give me those exact precision levels that I post for all of you people. I'm not making the numbers up. I'm looking at whether it's the upper Bollinger, whether it's going to, and of course I structure it very nicely. Here's your rising wedge. You had that consolidation. And then right now we are not even back up into the rising wedge. I use the pivots, and now these are all put, automatically populated as I drop these studies. When I say the pivot, right, the P, or sometimes I write pivot, but I'm going to use, now I'm going to start just using P. Watch the pivot. Anything below pivot, the machine starts selling like nobody's business. I would say a good chunk of the day trading algos that are out there, they run by the pivots. Fall way below pivot, it's going to act as a magnet. It's going to go there. Paul was asking me the other day, do you just use pivots? And I said, no, I use a lot of stuff, but this is something that's quite important. That's a good question, Paul. So bottom line is that I put up the pivot there for people to know. So you don't really need me like every 5 minutes. You see the thing dropping hard, the pivot's going to act as a magnet. These are going to act as support, the 50, the 34, the 5 moving average, the mid Bollinger. That's where you know where you need to bail, where you need to panic, where you need to get excited as it's breaking above that, how those candles are faring. And again, you get the big fat candle and we're bouncing off pivot. This is my entry, as you know, most of the time. That's my entry. That's my sell. Yeah, I might lose the last 20%. Who cares? I just made myself a fat triple-digit percentage right on these two candles. Now, just because a candle moves doesn't mean it's going to have an expansion candle. We don't know whether the candle is going to expand like that. There are many different things that are in play behind in the markets. That's why I scan all the other charts on the other platforms too to make a determination. This alone is not the guide, but it moves and alerts faster than anything that's out there. That's all I know. And the slow stows, you know that. Uncle Stowe moves from here. You can basically buy and sit pat majority of the time. Sometimes they'll move sideways like it did here. Big candle, move sideways late in the day. Everyone's like, oh, well, whatever, But I knew that, and this was Friday, right? Yes, this was Friday. So here we are on Friday. We get a big fat candle, bullish engulfing. I showed that. But slow stows are scraping dirt. I know somewhere along the line there's going to be a dead cat bounce or a reflex bounce, as I like to call it. And it certainly happened. We opened up 18 points on the S&P. What a start to the week. 18 points? S&P calls just went berserk. But by the time that the chasers and the lemmings came in right at these levels, guess what happened? They whacked the market. Nice fat gap fill down here. By the time they're like, oh man, that's it, I'm shorting the market, bang, another candle. Now you tell me that somebody who is not a technical trader calling these moves? I don't think so. I don't think so. So there's many different things that are happening, and I'm just giving you a sample of them. Here we have a sell, we have 3 sell candles, right, at the end of the day. What does this mean? Nothing. What does that pattern look like? Can anyone tell me? What does this pattern look like?
Bull flag.
Exactly. For now, it looks like a bull flag. You're absolutely correct. Now, what does that mean? It simply means that they will probably jam the market because global markets will open with a big smile. After what we did on Friday, they're not going to, anything can happen. But generally speaking, high probability that the Globex futures and the markets in Asia and in Europe are going to open like, yeah, they're finally catching up to us. Because don't forget, the German DAX hit a new high before us. And and the German DAX is the most correlated market to the US markets, just so you know that. So the bottom line is that you got a bull flag here. Bull flag will resolve. What happens up here, we shall see. It's not going to be a one-way ticket, but we still got, I think, another 48 hours to make another move. One with the other, they'll probably go to 20,050 or 20,100, whatever the case may be. Or maybe they won't get there. I don't know. So yes. So so those are the 4 platforms that I use. There's Quad, which is, I call it the Algo HFT charts. Freestockcharts.com. Investing.com. And good old Thinkorswim. Many variations of Thinkorswim, but Thinkorswim. Quick chart things that that I use on my charts, and I'm posting less on the free stock charts these days for no other reason that the others are working so well. But let me give you a basic understanding of the lines that you have to watch for when you're looking at my charts here. So I'm not going to look at that. I am actually going to pull up a, I'm going to actually go into the Twitter feed, and I'm going to change the screen to my reader screen. And it'll take you guys about 3 or 4 seconds before it refreshes on your screen, okay? So let me know when your screens are refreshed, because we're on a different screen right now.
Got it, boss.
Everyone? Liz? Paul?
Oh yeah, I got it.
Okay, sounds good. That's my vertical screen. That's my 26-inch vertical where I communicate with fine ladies and gentlemen like yourself, you know what I'm saying? So does it show as a vertical screen on your screens by any chance?
Yeah, it doesn't show up very well actually.
Oh, it doesn't? Okay, but that's a good thing you told me. So let me, because it's stretched, you know what I'm saying? So maybe your screen doesn't show too well. Let me go back to the regular one. It's a little hazy.
It's just small. It's just a small vertical window.
Oh, really? So the other screen, which was my horizontal regular screens, were showing better?
Yeah, this uses about 1/3 of my screen. Is
Oh,
all.
no kidding. Wow.
I could put 3 of these across if I wanted to.
Huh?
I could put this, across 3 times probably on my screen because
Okay.
it's
Well, I don't want that to happen, so I'm going to go back to.
You could zoom in. You could actually zoom in.
Yeah, but if you zoom in, it gets hazy, doesn't it? Like it kind of gets a little bit out of focus. I'm gonna stick to. I'm just gonna go back to. Much better, right? Good. So okay, good. Yeah, I just went back to the original, regular horizontal monitor. Let me do this for a second here. I'm going to walk you guys through a bunch of my recent charts and give you my interpretation of what I was seeing. And then, because if I just, let's see here. Okay, just give me 1 second. I'm moving it from my other side. I'm going to open up the folder, which has all my charts. Take about 30 seconds. Let me open it up. By the way, do you guys all have access to Dropbox? Do any of you use Dropbox?
Yes.
You do. Because while the developer is working on populating all the charts and stuff on the website, because all the charts are pretty heavy, right? So he's trying to do it, because I used to do it myself end of the day, and it took me a 5-step process, and I'm like, this is way too much, He's trying to create the thing where I can just drag and drop directly on my website. But before it happens, I'm thinking of creating a basic password, username and password, so that anyone can access the Dropbox, which has all my charts in it. So you guys can basically you guys can basically access it at any given time. And of course, the Twitter feed is there to go into media. You know how to do that, right? On the Twitter feed?
Yep.
Okay. The Dropbox is going to be helpful because you can see the charts clear, because they're going to open up as a full thing. 1 second. I'm just setting it up on the other side. I'm going to open up a couple of things here. What I'm going to do, especially for, and Liz will find this helpful too, is I'm just going to walk you through some of the charts that I put out there and how to read them. So this is.
I think Toss, by the way, I think Toss has a decent way to share charts. I haven't done it much.
No, it has of doing that, but then I don't use I use 4 different platforms. You know what I'm saying?
Right.
So I can't put the other stuff in there. Yeah, TOS is a very easy way of sharing charts. So let me just get this walk through these quickly. So this is more of a trading chart, right? Anytime you're seeing a 5-minute or a 15-minute and stuff, I'm playing these and alerting you guys, and you guys can certainly find it extremely useful on TOS to use the 5 and 15-minute if you're actively trading S&P calls and puts. Okay, so here, so I set it up, so I know what the range is, and I do it early part of the day, and that's when I put out there like, okay, here's what I think is going to happen, and this is basically range trading. Every one of these candles can move your things 20, 30, 40%, and you can see that, you know, this was at 1 o'clock, the big move up, and then managing the trade, extremely critical, because if I'm starting to see a candle develop which necessarily hasn't broken the range, it very sweetly bounces off these different parameters that I have in place, such as that I'm going to walk you through. The wide parameter that you're looking at is basically your, sorry, 1 second. Did I cut this out? Okay, the blue lines are your Bollinger Bands. The white parameter, you can disregard it, is the acceleration band. That's when if things go really wild, that would be your 20-point type of 100 plus, 120 plus back and forth. All right, acceleration band. Leave that alone. Generally, things trade within the Bollinger Bands. So you have the Bollingers. I use the Darvas box like a machine, because many times you're going to start to see these fat candles develop, upside and downside. It hits the upper end of the Darvas. It doesn't stretch the Darvas higher, and it basically, you know, falls back from there. All mechanical trading, except that we're trying to make this simple. So if the Darvas stretches higher, for example, like that, you know there's another leg coming. But if it's within the range, it stretched it down a little bit, so the Darvas actually stepped down a little bit during the day between 2 o'clock and 3 o'clock. Doesn't mean much, but at least you handle your trades better. I have the consolidation channels. The pullback, if it broke below that, then you would be seeing at 2268. So what you should be looking at when you're looking at my charts, you look at the red line, which would be support. You look at the blue lines or white lines, which are resistances. You keep an eye on the Darvas, and of course the internals are your fast stochastics that I use on these, and those are bouncing off the lows, so that's a plus. Volume's key, very key when it comes to trading S&P or Russell 2000 options. The volume is key. You get a sharp volume move up, you know that either it's a exhaustion top, in other words, it's, you know, that's the final squeeze, right? You go up a little bit more and then you fall. A large volume move up doesn't necessarily mean it's going to continue moving up. It might mean, and those are subjective matters, it might mean that they finally put the squeeze on the last of the shorts over that short time period, so they got squeezed, popped, and then that causes an exhaustion top, and you don't want to be buying that necessarily unless you see a corresponding development of a green volume candle. I don't want to get too much in detail on that, but that's, you know, that's just chart reading. So you focus on the Darvas. The two lines that I use consistently and has worked for me tremendously is the 50 and the 34, primarily for longer term, 1 hour, 4 hour, and dailies. It doesn't mean that much on a 5-minute chart, but what does work very well is your where's the yellow line? Doesn't show up here. Oh, right there. This yellow line right here is your 5 SMA. The 5 SMA is a pretty critical component of traders. Some people use 8, some people use 9. I use 5. 5 trading days, I use 5. Keep it simple. It works for me really well. So the 5 SMA is a great trend indicator over short term, over a short term time frame. It's also a great indicator when you're looking at daily charts, because if the 5 indicator is starting to turn down, you know, maybe something is going on. You know, you don't know. Whichever the case, the 5 SMA, the 34 and the 50, the Darvas box, the Stows, the volume bars, that's pretty much it. Now, this dotted line that you see time to time is a VWAP. and the VWAP is basically just value weighted average price. Used to be the staple of institutional traders for years, still is. And I think there are many algo programs that run off VWAP. In other words, if you're deviating too far away from the value weighted average price, you're going to basically trend towards that. So that's really what it is. That's the dotted line is the VWAP. Want to know, want to learn more about it? Just Google it and learn it. There are VWAP traders, trade off the VWAP, but I just use it as a proxy. Let's look at another chart here. So here is a very simple chart on a short term, on an intraday basis that I showed on Palo Alto Networks, and this was this beautiful 3-candle move here suggested that we were going to break out over the ascending triangle, which it did. I believe it did that. Well, this is this is a longer term chart. I'll go into that short one in a minute. The daily looked really good to me. I don't know if it's going to go into the gap, but it looks pretty likely. So I liked it. Now, why didn't I like it the day before? Was simply because that there was this doji formation, and I had posted that chart too, and that to me is tricky. So I would rather go in there and buy it with some level of confirmation. This is looking good to me. Drew the lines on it, and this is a simple chart with no moving averages. And again, these are just trend lines. So best case scenario, we close the lower end of the gap. That's the gap box, and that would be somewhere in that 144, 145 range. That's $10 from here. That's a lot of money. Calls are cheap. You get at least a 200-300% move on your calls. So it's good enough for me. And then we see what happens after that. Let's take a look at this is a daily. Again, another chart without any moving average and stuff, simply showing the candle dynamics. This is a rising wedge. Upper end of the wedge is somewhere between 135, 136. I believe the stock gets there. Stock's already moved tremendously from our original buys, which were around this 115, 120 levels. This is a clear-cut, very clean picture on the daily for swing traders. Like I said, a lot of the times I put the arrows and stuff, so it's pretty obvious, but I still do it. That this is where we're going. If we break out over this, like an Amazon type of move, remember Netflix is the new highs, so obviously you're going to get some back and forth on that. So bottom line is, you could get a big fat candle like that, moving the stock up in the 140, 150 zone. And that would be just, what we call a breath thrust, like bang, like Amazon did and many other stocks do. So you need to be a very fat candle that breaks out over this rising wedge. Otherwise, it's going to get up here, create a consolidation channel, which could bring it down as low as 125. If somebody's long, then obviously the point of they don't want to be holding them on a 10-point move down. But if somebody's, let's say, is swinging this out there towards earnings or stuff like that, the stock doesn't materially change its fundamental direction till 125 or so. Below 125, you're going to see some heavy short selling, which would most probably bring it to the 110 level if that happens and create a monster buying opportunity, and you would be having one of those W formations, dragon bullish formations, and everyone's freaked out that Netflix is finished and all that stuff. And from there, it might make a very sharp move. As you can see, these are not normal patterns. This is one thing I do want to point out to everyone. Because of the volatility in the market and these machines creating artificial volatility repeatedly, these are not your normal patterns. In hindsight, yeah, you can draw it a sort of a pennant and that type of stuff, triangle consolidation, and then it broke out. But otherwise, to be honest with you, they're not normal. But who cares? I'm not the one making the rules. I'm just playing the volatility. So one can look at it in a broader way if they are multi-month believers of Netflix or whatever the case and say, okay, it was in a trading range. You hear a lot of the guys on the technical analysts on TV talk about trading ranges and stuff. Let me be very clear about one thing. Anybody can talk about a trading range. Anybody. Oh yeah, the stock's moving between 80 and 110, and if it breaks over 110, 115, I'll be a buyer. You know what? They're just taking the easy way out. Want to make the real money, you got to take some nice fat profits along the way. And if you're waiting for the trading range and didn't buy it at the 110, 115 level, you're not up that much. Okay, so the point is that a lot of these these public technical figures, these guys, in my opinion, always take the easy way out. Oh, here's a big fat trading range. If it breaks above that, it's going to go. No, it might break the trading range and completely collapse back into it. So again, it's to my benefit because I'm showing stuff, you know, well before that. Let's look at another one. So here we have another short-term trading chart, which I made money on. I alerted you guys too. It was bought a buck and change, sold close to 275, 260. Not bad for buying a couple of cheap contracts on this big waterfall decline on the Amgen thing. Still looking pretty damn good. This was actually at around 12 o'clock. If it had broken out over this, then of course you would have some pretty fat short squeeze for another 4 or 5 points. It did not break out over it yet, and we'll see. Here's your gap fill. In order to do a gap fill, you just touch the lowest bottom of this and the upper bottom of where it, you know, fell to. So there's your gap fill. Will the thing get fill this gap? I don't know, but there's a good possibility it might, because I saw Amgen. If Amgen really won the patent in that huge a thing, you know what's happening is this. Amgen basically won the patent for Regeneron's whatever drug it is, and this has been a patent litigation fight going on for almost 6 years now. So Amgen won it. What does that mean? Regeneron's finished? They have multiple drugs in their platform. More importantly, they're going to have a settlement. What does that make Regeneron? A serious buyout target, in my opinion. All right. So these are the quick way, the cheat sheet of thinking about things if you know what these companies are about. So so the initial freak out, like, okay, now, no, it's a cholesterol drug, yeah, that they can sell that and their revenue is going to be hugely impacted, this and that. Sure, it can happen. But on a short-term basis, I'm looking at it from a tactical standpoint. We have made some very decent money off Regeneron, trading it multiple times. So I have no complaints about that. But easy to read chart. Here's your descending channel, it looks like, and then a drop. Let's take a look at this is all from Friday that I'm pulling out here from the Dropbox. So here's my trading setup for CMG, right? This is Wednesday, fat candle, continuation. That suggested to me that that these guys are going to, you know, drive this thing higher. Generally, on options expiration, they tend to squeeze Chipotle. Don't ask me why, because maybe too many people are short. You know, we have played Chipotle so many times as lottos on Fridays, in between other swing trades too on Chipotle. But that I can't even tell you. One time it was up 900, like 1,000%. In fact, on Friday, I gave the lottos on Thursday, on Friday they went up almost 500%. In other words, they went to more than $6. That's a lot. Buy a couple of lottos, you're paying for more than burgers, you know, burritos over the weekend. So this is a quick trading setup, you know, like easy to read and very, very helpful. Very, very helpful. I said 396 based on this top here. It went exactly there. No magic. Splunk.
So did you alert on that after that candle or after the big candle?
I alerted the day before. Let me go back to the thing. 1 second.
Oh, okay.
The Chipotle alert, this was Thursday, right? So the Chipotle alert was initially put somewhere around here. Then another alert, because we made money on the actual, we did 2 sets of Chipotle calls. You can scroll down the Twitter feed and read it. So then we got some fat profits of that. And then I alerted, when I saw this reversal, I alerted again at this point saying, Ripping Nose, you bought the CMG calls, right? Not just a lot of
it. It was the 390s and then the 395.
Thank you. Thank you for reminding me. So basically, the original one was 390, and then on Friday I said let's roll. No, on Wednesday I also said buy the 396 and 400. I'm not 396, 395, 400 lottos, and those were done before this candle developed. When Chipotle started to rise $5-6, that by that time those things that were alerted on Thursday were already at $3-4, but they again went up to almost 7, as you know. So the alerts were put around here based on this reversal candle, and then the second one was put before this reversal candle started. And then, of course, then you got an extra bonus by another big move on Friday, which generated, which basically took those 150, 120 type of lottos, which were expiring on Friday, mind you, all the way up to 396. And
it actually went to 399.
It actually went to 399. There you go. You know, round numbers. You know.
Nice.
So let's look at, and you'll see a lot of them. You'll see a lot of them. But then lottos are lottos, right? You know, the worst. Here is the worst part about lottos. The returns are so sexy. It's just like, what the heck? Why not I put in a lot more? But then you put in way too much more, and it doesn't go. and then the lottos depreciate it. So my method of doing it, I do it either staggered. And I'm not going to put other than a certain amount unless I'm pretty damn like a crazy, you know, the little demon goes off in my head and said, oh, go for it. I don't put too much in, because if the lottos are going to give me 200-300%, I'm not going to put $10,000 in a lotto and expect to get $40,000 out. I used to do that crazy stuff way back. Okay, I don't anymore, and I used to probably make more money back then. I knew less. You know, they say ignorance was bliss. This was back then, but I make consistently more money than just making 1 or 2 big hits, which is the downfall of most traders. Most traders are always looking for the home run, so they make a couple of great big fat trades. They do really well, and then they lose everything along the way. So I'd rather make consistently solid money, but not like lump in one. So when the lottos come, depending on your risk tolerance, play reasonably small. Not that small that you won't feel the difference, but the point is that in this type of lotto, if you put, let's say, $1,000 or $2,000 or whatever the case may be, or a couple of $100, and you're getting a 200, 300, 400 point move, that's, you know, that's pretty big. So that's
Thanks for a nice Friday.
Exactly. Thanks to get your mindset for Monday. You know what I'm saying? But I wouldn't recommend. Again, I'm not anybody's advisor, right? So I'm not here to suggest. But I wouldn't recommend putting big time money into lottos and stuff, which I know some traders do at times, and they're just losing their heads because it's working out, and you can see who they are, and that's fantastic. But I would say most of the times, you know, unless you have a real powerful kind of high momentum market, you're going to lose if you put too much in. So small, you know, decent amounts are fine. Okay, so Splunk is a stock that I've traded earnings primarily, and here is your standard daily chart with some very simple format. This is very easy to read. I normally don't put these type of arrows, but I did. And I feel that the stock, which I think reports earnings next week or the week after, does have at least 5 or 6 points in it, if not more. And so far, so good. So again, it can fall, whichever the case. Earnings are always a crapshoot. So that's easy to read. You know, you have your resistance here, either in green or in gray, and then you have your support. Let's take a look at Amazon. So here's your trigger. I said the stock will go at least to 790 and test the bottom of this gap fill. I honestly thought, which I posted too, because I was mostly out of it at these levels. Okay, I mean almost all of it, and then I was playing with smaller amounts. Once you get a breakout of this type of triangle pennant or consolidation, and I explained this very clearly on the video. When you see it, you know, it'll be explained. We were looking at the same daily chart, and I said in that video, it's almost eerie, and it's happened a couple of times, that unless you get this type of monster breakout, i.e. breadth thrust, very difficult time saying that word, you know, it's like you're chewing the words out, right? Breadth thrust, and a big fat move up. Unless we break out of this triangle, this stock will have a difficult time and it'll remain range bound. or stay within this level, even come down to 740. But it went the other way. And it was a magnet. And the magnets were that here was my level posted 791, 792. It hesitated there a bit. Not hesitated, it took some profits, whatever. And then it made a beeline to get towards 800. Did Amazon touch 800 or 799?
I think it did touch 800.
No, I can't remember, but I'll see it on thing. I think it went to 788, 799, whatever the case may be. You got a big fat gap fill here. Okay, stocks act very weird during gap fills. It might hit that gap like it did here. Well, here it was coming off a different type of level. Overshoot and go to 820 right before earnings. What's 20 bucks on Amazon? It's nothing. It happens in 20 minutes. It happens at the open. Or it might find some major resistance here and create a nice fat consolidation channel that brings us back towards 790. If not, 780. Whichever the case, as long as this dragon bullish pattern is held, I would say, not broken below, the stock probably wants to go higher. We'll see. Whichever the case, my determination on Amazon, and when I said buy the lottos, the 790s and stuff, which went from $1.40 to $9. That's $1.40 to $9, guys. Even one would pay for a very expensive dinner in New York City, which I don't necessarily.
Yeah, you have to remind me that I missed that one.
Well, I don't need to remind anyone. You need to see that. Okay, it's right there. But is that Paul?
Yeah, that was pretty awesome. Yeah, that was
Yeah. No, you know, it was funny because there's a gentleman who was a pretty active trader, but then he opened up another business and stuff, and you sound just like him. I don't remember his name. For a minute, it just took me back. Great guy. I think he's coming back and said he was very busy. He was opening like 2 or 3 businesses and somewhere from out west. So anyway, so that's it. Nothing there to think. Now going back to this was what day was this? This was the 5th, right? This was the 5th, right? So this was Thursday. So you started to see that breakout. These charts really helped me. When you see these charts I put out there, just replicate on your screen somehow or the other, because these are exact levels that the stock will float out of. This is obviously, what it simply did was, not simply, nothing is simple about this business, I should never use that word, is it took back. It's a complete pattern symmetry. And 780, I said it would go to 782.5, which it did, and then pull back a little bit, and then it did that big move up. So whatever the case may be, these particular trading charts, which I'd like to keep it simple, where I draw the levels are pretty damn helpful. So when you're trading, and a good suggestion to anybody, and let's say you're focusing on a stock, on a particular stock, that trading stock that you have, then you have a decent sum of, you have some monies in it and you want to make money on it, then match them or draw your own lines. Very easy to do. What were the supply points, i.e. sell zones, and what were the buy zones? Forget about the dynamics of internals and stuff. Just put those zones in there. Once you put those zones in there and watch it and this is a 1 hour, so it's more like sitting back, not jumping at every 5-minute swings, you will be it'll be much calmer on your head, and you won't do stupid things. Simple as that.
Hey, Clueless.
Go ahead.
Can you draw a downtrend line from that top middle? All the way down?
Sure.
You would see
absolutely. And in fact, most of my other charts had that downtrend line put in place.
Yeah.
So you're absolutely correct. So you can draw this downtrend line.
And that's your takeoff by.
You could do your takeoff on that. Of course, there's going to be some jostling around here. If you draw the downtrend line, in fact, it's more helpful because then you have a point of reference that if it falls below that, you're completely out. You know what I'm saying? Yeah, exactly. So that's yeah, certainly. And you can draw a downtrend line like this, and I've done that multiple times on these Amazon stocks and you'll be amazed how well they match. So let's say you didn't buy this downtrend line, this breakout of this more macro downtrend line going back 2 weeks, right? This is a 2-week line. Tuesday, yep, that's 2 weeks ago. is more of a powerful indicator, and plus you see a candle the size of the Empire State Building, you just like, that's it, I'm going on. Momentum studies, we'll cover that on another session, is key. Momentum dynamics, just trading on pure momentum of some larger stocks can be very profitable. Okay, just by following the expansion candles or expansion candles on the fallout side. Somebody asked me, which I covered in the last video cast, why didn't you short Amazon? Your charts were so damn good, it showed that. I'm scared to short these stocks, okay? Because I've been burned before. These are powerful companies. Why do you think this happened? This happened because billions of dollars worth of shorts, I would say, or multi-millions, were completely singed, burnt. I'm not going to mention it, but a free trial guy came in the other day, nice guy. He sends me a long-winded why they're short Amazon right around here. And he says, please don't put it out there because, you know, this is a special service that I use. I said, fantastic. Post it in the trading room if you'd like to. He didn't. I still have a copy of that. That is a testament of why you don't short these stocks. It was a long-winded thing. Oh, well, Amazon, yes, we're looking at 720, possibly 7. Like, what? I'm not saying they're probably right. Like, after earnings, the stock could be down 150 points for all I know. But it's happened the day before this happened. So this is what I'm saying, okay? This happened, multi-millions, if not billion-plus dollars on the short side just went boom. There's no reason for Amazon to move like that. What, they came up with the Alexa on steroids? I mean, come on. It's some people said, oh, yeah, they went up because all these Nordstroms and Macy's, they had crappy sales. Amazon took them all. Well, we know that from 2 months ago. We know that retail sales were garbage and most of the online cake was, was in Amazon's favor. So that's why fundamentals don't justify stock moves a lot of the times, mind you. Because if everyone knows the news, it's baked into the market. This was a pure technical short squeeze, a big one, period. That's it. And so anyway, this guy sends me this like right around here. Yes, we're very heavily short in this, whatever service that he used. They were short like, I guess it's a mini fund or something. They were short like 10 million bucks. They're done. They probably blew up. These type of things blow up mini funds, just so you know that. Just the way this type of thing can blow up a small hedge fund who might be 20% concentrated in Amazon. That's it. Their margin calls, they're finished. They have to restart again. So that's what happens. So gold. So here we have, it hit here. I put it out there. Trade management. If you're up a lot on something, you got to take bunch down. And the bottom line is nothing changed in gold, by the way. This thing was down at just a little bit here, like that. So gold is still going higher. Gold is still going to go to 1240. Just like this Friday, when they dumped it for like 20 minutes, just a big sell program came in. Well, sell program came in on gold on Friday, primarily because of profit taking. But the overall pattern symmetry of going to at least 1240 or 1225 didn't change. And I'll be putting updated charts and stuff out there. So bottom line is, let me see here. Let me find another stock to put through. So here's Tesla. Okay. So this is a pretty clean chart. Here's your channel. Here's your channel. This was drawn on, what day was it? On the 3rd. So this was earlier in the week, right? The day the market opened. Yeah. So I kind of followed this thing. Now with Tesla, I trade pretty fast. I don't hold large Tesla positions overnight. I hold some. I try to scalp the meat right because the movement happens during the market. Okay, so keep that in mind because Tesla's Tesla. Down 30 points, or it could be up, 5, 6, 7, 10 points and accelerate during the day. I'd rather take that money and bank it. So this was a clean chart on Tesla, easy to read. There's your range, and I believe, where did Tesla go to? It went to 229, right? 229 or 2. So it's somewhere up.
It hit 230.
It hit 230. So at this point, one has to go back. This is a 1-hour chart, and I have multiple charts on Tesla to show that it can hit. Oh, this is a good one. Good that I clicked on it. So here's a chart on yourinvesting.com. Without getting too much into it, here's your trading range that the stock is really trading in, a wide one. Everyone thinks the stock's gone, finished, and then bang, it goes up. So this is a pretty defined trading range. I drew this on the 3rd, Monday. So at this point, pretty damn good shot that the stock hits 240. And at 240, I'll probably put some shorts out depending on what I see happen during the day, because this is one crazy stock. And like I was kidding around with Paul, that I don't even like Teslas. And yes, I agree with you. He is a great marketer, that guy. So the bottom line is that I don't hold any dogmatic view on Tesla or whatever. It's just made me some pretty decent money over the years, and lost me a chunk of money when I tried to short it. This was a few years ago. Make a long story short, this is it. So it hits 240. I'm not going to be like, oh yeah, that's it. This is the time to buy. Like you'll hear a lot of bozos talking on TV. I'll tell you that. So this is your trading range, a broad one. Of course, this is the daily chart. If it breaks above that, is it possible that the stock hits its high? Believe me, it is. And that's a massive pattern symmetry completed since April of 2015. Because the stock is still pretty heavily shorted. Very heavily shorted overall for a large cap stock. From a crazy, a wild Tesla bull will tell you, definitely look at this. It's going to move here, maybe move down, a couple of points, and then it's definitely going to hit here to do that. And they might be right. They might be very wrong, because it might go to 240 and then collapse down to 190 again, which would again become a trading buy. Multiple times, this level here, 180, has served as a huge money maker. Just simple as that. And I've traded that pretty simply on that front. But big zigzags, double bottom here after climbing 20 points, went back to 180, and then this is where we are right now. Little bull flag here.
Hey.
Yeah, go ahead.
Clue, can you do another favor?
Go ahead.
Can you draw the uptrend line from the bottom to the middle? I think it will hit 240.
Yeah, because I'm not using the platform here. Hold on one second. Oh, this.
Oh,
no, I'll do it.
No, the very bottom on the left.
No, let me just change the color of this pen because I can see it.
Okay.
Because otherwise it's merging with the background. Hold on. Okay, so you're talking about
very bottom on the far left.
Here?
Far left. Go further. The downtrend line. There you go. That one.
Yeah.
Draw up to the middle.
Yeah, but then at the same time, I can draw multiple uptrend lines, so they'll be a little crooked. So let me do this, okay?
I think that will hit 240.
I think so. It's only a few points away. Just for the heck of it, it'll move 40. You don't need major technical analysis, because just to kiss it and show, and then get in some late buyers and then drop them like 10 points. You know what I'm saying? So you can draw multiple lines here. You can see that. The way I would do it, because I don't want to go that far. What I would do, in my case, being more of an active trader with Tesla and not being a believer, to be honest with you, is the fact that I would draw a channel.
Okay.
There you go. That channel to me is what you should be concentrating on than worrying about whether or not this thing. Now, so that's a pretty defined channel right now. Yeah. And the lower end of the channel is 215 and the upper end of the channel is 240, 25 points. If it breaks 215, short the stock. If it breaks 230, well, it's already there. It's between 230 and 240, there's this much gap. They'll probably take it there quickly. After the space, when's the SpaceX launch? On Friday? No, Monday. They're launching launching all those satellites and stuff. So if that rocket doesn't blow up, if it blows up, short the stock. Like last time. Honestly, if the rocket goes successfully at their launch, after their last unsuccessful mission, right there you get 10 points on the stock. Stupid stuff, but that's what the markets will do. Saying, oh, they're back in form and all that stuff again. And that's where, So anyway, it's 12 o'clock. Okay. So guys, I'll entertain a question or two, nothing too technical. but just general question about the service. So feel free to ask me before I sign off. I think there's only Paul and Rip left here. Steve left, he had to go, and Liz. So any quick questions, Paul?
Well, I guess for homework, it sounds like I need to look at stows and McCullen oscillator. What you do definitely is you bring it all together nicely, because what I have is a bunch of head knowledge that doesn't fit together, and I don't know how to use it. So
sure. No, not a
I've already learned a lot.
not a problem. And this is a basic session. Imagine. Then the other homework you need to do is when you have a couple of minutes, please listen to my videocast. In fact, listen to my videocast from election day. Okay. And what we did, because find that one.
I think I started watching a training video from last year and learned a bunch from that.
Okay, good. So, and like I said, I'm unscripted. You know, we're not running a snake oil business here, so I don't have a script like, okay, if I read this stuff, these guys are gonna excited. This is like what we call a bespoke boutique service, right? We are catering to good people who are willing to learn, and as we, let's grow larger. I have no problem with that. But as you can see, I give a lot of personal attention to these things because I do believe, and that's a weird part of me, that if I'm making money, then everyone should make money. That's a good motto, right? So that's
Sure.
that's the way I'm looking at it. So the videocasts are important.
I look through TOS, and I see thousands of things to choose from for making my charts, and then I'm like, that's which one's any good?
Well, the ones the ones that I use are a good starting point. And believe me, I had my first developer, the one who actually put up the site, a great guy. He used to write scripts for TOS. These guys are like rocket scientists, but he traded 5-minute charts and made pennies. I said, what do you do? I mean, you literally are writing scripts that other people are using to trade, and you're trading this like a monkey on a hot tin roof. Well, that's what people are. There's way too much stuff on TOS, if you ask me. It's like sitting on a console on the shuttle. You know what I'm saying? But that's fine. My thing is simplicity. If I can simply, by using 4, 5, 6 indicators max, come to the right conclusion and beat the pants up, that's fine with me, because honestly speaking, I'm pretty lazy. I do not want to look through 10 different indicators and figure out where it's going. To me, it's working. I'm keeping on refining my laziness, and hey, it pays the bills, and hopefully it's going to work out great for you guys too. So okay, so Rip, have a great weekend. I'll see you guys on Monday, and thank you for Paul for coming in and joining us. And do spread the word around, if you have friends and stuff who are interested in making some good trades. Okay?
All right, thanks.
Thank you, sir. Have a great weekend.
Thanks, Clue.
And this will be uploaded on the YouTube channel too, so you guys can review it, just for basics. But pass it on. Thank you again. Have a great weekend.
You too.